Stock Play of the Day Overtime is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Hello and welcome to the Stock Play of the Day Overtime Edition. On Monday's Stock Play of the Day, we talked about the ETF that tracks the airlines. The symbol is JETS, JETS. Today we'll discuss, did we score or did we fumble? Well, I know it feels like a while ago, but this Monday we had some real good news on the COVID front. Pfizer came out and announced their stage 3 trials on a medication that could help fight the COVID vaccine. And because of that, we saw a lot of the travel companies and airlines make a strong move to the upside. So on Monday's show, we talked about JETS, which is the ETF that actually tracks the airlines. And we just looked at a strategy where if we were a little bit more long-term bullish on that underlying, how could we use options to participate in an upward movement, but also reduce some of the risk as opposed to buying the stock outright? So quite simply, we went a little bit deeper in the money and we went out further in time, and we bought an option contract that moves a little bit like the underlying stock. We bought something that had a delta, and that delta was 83. That meant that if the stock went up 1, we expected our option contract to move up about 83 cents. So what has happened since Monday? Well, a lot has happened overall in the world, but in general on JETS, if we look at the trade that we set up, let's start there. We see JETS is up today 65 cents. And one thing that has been true is since Monday, there's been a lot of volatility in the underlying stock. 65 cents on a $20 stock is, 3.25%. So that's a fairly good move to the upside, not quite as big as it was on Monday, but we actually have came down since Monday. So here's our trade that we had that we looked at. This was our paper trade on Monday. And as always, when we talk about stock play of the day, we're just trying to learn. It's not meant to be a recommendation. But we went out to the March expiration in 2021, so we went out quite further in time, and we were looking at just buying that call option. The delta right now is 80. It's trading at 470. We paid 520 for it. In theory, on paper, we paid 520 for it. So we are down a little bit on the underlying stock. So let's look at the chart and see what has happened. Now, as far as JETS is concerned, right now we have a 15-minute chart that you're looking at, and this starts on Monday at noon. We always tape our show at noon on Eastern time on Mondays, and it's a real-time show, so you're seeing real quotes here. On that 15-minute chart, this is noon. If you highlight down to the bottom of your screen, and you'll see that this was the rest of the day on Monday. Would have been all day Tuesday. This would be all day Wednesday. And then here we are on Friday. And right now it's trading right around 1988. That's where it's trading. So obviously the market ran up a little bit after the call, but since that call has happened, it's actually been down on our position, but not too bad overall. But I just wanted to highlight one thing on the chart. Now, this was the chart that we were looking at on Monday, actually, that we highlighted a little bit. That one thing that is true about the travel stocks in general is that we did have a big pullback in March, and we highlighted that right here. I need to get my mouse right over here. Okay, we highlighted that big pullback in March. And since that pullback, we've had a strong move to the upside, but we've only came back about 40% of the move to get all the way back to the highs before that March drawdown. So we looked at the Fibonacci's, and we kind of mentioned the stock was right here, and that it was breaking through that 50% retracement level on the Fibonacci's, and that it would be good news if it would stay above that, and then the 61.8 number might be in play. Well, that didn't happen, and it came down precipitously, actually, from when we talked about it on Monday. But it's interesting to note here that the 38.2% level, which was a little bit of resistance to the upside right here back in September, now acted as support as we are looking at it around the November 14th level. It actually came down and touched that line before it started its move back up. So I just wanted to highlight this was the graphic that we had on Monday. I wanted to show how it's kind of playing out a little bit here using those Fibonacci numbers. So it is good overall that on the downside that the support did hold and that we are going higher today, and we got a green candle today. Overall, that's good news, but going forward, it's going to be a lot of news-based information about what's going on with Pfizer and their new drug, et cetera, et cetera. Okay, so if we look at our trade from Monday, it's more of a let's stay the course type scenario is the way you would look at it. We bought an option as opposed to buying the stock outright because we wanted to limit our risk to the downside. We put up about 30% of the actual price of the stock to buy this option contract. And we get a lot of real representation because we bought an 83 delta option contract. Right now, I'm going to highlight here the delta is at 81 approximately, and that's because the market has came down a little bit. So on this entire trade, we're down about 50 cents overall. And if I put it in the right rail, I'm just going to kind of highlight this over here. And if you were to ever close this position, the way that you would go about closing it is doing the opposite of what you did to initiate the position. So if you bought to open inside the Ally Invest option chains, now you would be selling to close here. So I'm going to highlight that. And the price that you'd be looking for is somewhere right around the midpoint at $4.70 right now. So that would be our limit. We'd kind of try to work that order. No guarantees of a midpoint fill. But if you look at it that way, we paid $5.20. Looking at $4.70, that means you would be down 50 cents on that trade. But our outlook was a little bit more long-term bullish. So I wouldn't necessarily think we would close out this trade just because it's made a smallish move to the downside. The support did hold, and we're getting a fairly good solid update today. So what could we do? Well, the easiest thing to do is to just stay the course. As the plan was overall, we're going all the way out till March. So we have 126 days left for this to live. So there's obviously no hurry there because we bought a longer term option contract. But another strategy that you consider along the way is actually the Figleaf strategy. And I'm going to highlight that inside the Ally Invest options playbook. The Figleaf just means that we have a longer term option that acts a little bit like stock. And this would be very similar to a covered call position in that I own the stock. I'm okay if it goes up a little bit and gives me a little bit of upside. But if it does, in that scenario, I might have to give up my underlying stock. That's a covered call. In the Figleaf, we have an option contract, but we can sell a call against that position. So if we did that, it would look a little bit like the covered call as you see on this profit and loss graph, but we don't have hard lines like a covered call because we're dealing with option contracts and we're dealing with time value overall. So if you were going to look at that right now, I wouldn't want to go out that far in time. If I'm looking at doing a short-term call to try to generate some cash against a position that I own, or basically give us a little bit of protection on the downside. If I look at the 14-day option contract going out to November 27th, I'm going to run up the top here and show you the quote. The quote is still 1919. It's up 67 cents. I could maybe sell the 21 strike call. I wouldn't want to go out much further in time, but if I do that, we're looking at a midpoint of about 35 cents. And this is the way the trade would look overall, is I own this option contract, the 16 strike, and I would be selling the near-term strike against it. Now, the big difference between a fig leaf and a covered call position, and the fig leaf is the term, was actually termed that inside the options playbook. I came up, I came up with a name for it. Overall, if the biggest difference is that you don't own the stock. So if you're going to do a strategy like this, you don't want the stock to get called away. You're just trying to bring in cash and you want some time decay. So in order to avoid assignment or to attempt to avoid assignment, you want to look at rolling a covered call. This is the same concept of a covered call, but if that underlying stock gets to your strike price, you need to have a plan, a good plan, because you're dealing with options as opposed to dealing with stocks. So required reading would be rolling a covered call inside the managing your positions tab of the options playbook. All right. So in general, let's summarize what we're looking at here. Jets made a little bit of a run up, then came back down. Support did hold. We're up about 66 cents today, or almost 3.5% at this point in time. But overall, we bought a longer term option for a reason. We had a little bit more longer term outlook because of the news that we saw on Monday. And the preferred course overall would be to just stick with the plan and stay the course. That's it for this episode of Stock Play of the Day Overtime. On Monday, we'll be back at noon Eastern time on Ally Invest YouTube channel for the Stock Play of the Day. Please remember to click subscribe and ring the bell so you get all the alerts, and we'll see you Monday.